I'm Caleb Kidd Coy, Epic Legacy Hero Builder, and I'd like to welcome you to Living Like a Bank. Along with myself, you'll hear from other successful experts and people who are busy serving and empowering many lives. You'll see how we're showing others to become debt-free in record time as they build economic discipline while generating a bulletproof family legacy revenue stream together. We'll learn how to live and operate just like the banks do. Caleb Kidd Coy here, your alchemized slayer of mediocrity, heroic family legacy builder, and host of Living Like a Bank podcast. And I'm fired up today. I was in Rotary meeting this morning, Tim and Marlene, and obviously I've called you guys on last minute here to do this impromptu live, which is really cool. And I was sitting next to an amazing lady, Fran, and we were talking, right? She's very influential, in the community, very active at a technical college. I recently spoke in classroom of a university, which was really, really cool. And the kids ate it up. So needless to say, I'll be going back. I've been invited back to do it regularly. And I am super stoked on so many levels. But back to Fran here. Fran and I were talking about what I'm up to these days. And I'm like, okay, so what are you doing over there at the technical college? And so she's like, oh yeah, you need to come speak to our Rotaract kids. And I'm like, yeah, let's do it. And anyway, we get into talking about life insurance because she wanted to dig a little bit more. What do you do, Caleb? So, we went all this little family legacy, estate planning, insurance, whatever. And she said, some of my organization over here, they've been utilizing the power of, whole life insurance to, have cash value benefit. And I said, oh, interesting. I said, by the way, did you know that big banks and big corporations, that's their go-to? And I said, on another note, you ever heard of this bank called Truist? And she's like, oh, yeah. And I said, well, they're number 5 now in the country for the largest holdings of their capital cash reserves in life insurance contracts. And I said, I gave a banker a lesson on that, and she had no idea that that's where banks held their capital reserves. And she looked at me, wow, are you serious? I said, yeah. There's been plenty of banker that I have educated on this. So then we got to talking about the power of an IUL. And I said, whole life is a good strategy, right, to hold cash value. But let me tell you about an IUL and what it can do for you in having more benefits, more upside potential earnings without any potential market losses. So Tim and Marlene, I called you because I know you guys share my passion and excitement about these things. So what would you, say to people who maybe they've heard of the banking concept, or let's say, the whole infinite banking ideal. They're familiar with, whole life insurance, but they don't really understand what an IUL is. What would you guys say to them about that? And one of you can pick and go first.
You go first, Marlene. Ladies first.
Thank you, Tim. Well, to
Such
me,
a gentleman,
right? To me, an IUL is like having your own bank. That's it. I mean, it's basically doing exactly what banks do. You mentioned capital reserves, creating your own capital reserve, your own bank. Okay, so we understand how a bank works, right? We know that the bank says, hey, come put your money in here and I'll loan it right back to you. That's all a bank does, right? Well, the same concept we've actually implemented inside of an IUL. So rather than the bank making the money, now it's you making the money. So that now, for me, the IUL is your
it's a great analogy too, Marlene.
It is a great analogy. And it sounds so good in concept, right? And in presentation. But Marlene, what do you say to people that just like, they go, well, that can't be possible, right? I can't, have my own bank, or, how much money is this going to cost me up front and things like that? What would you say to somebody that just finds it very hard to accept the reality that they can actually become their own bank and lend themselves money that essentially they're borrowing from someone else?
Well, I use the same analogy. I say, okay, the bank, we're going to pretend the bank has one customer. That's it. The bank has one customer. That bank says, okay, we're going to open up an IUL with an IUL period. In that IUL, the client that puts all their money into our bank, we're going to take that, call it $60,000, and move it into that new IUL. Okay. Now the bank has overhead, right?
They do. far as I know, they got bills to pay and employees to,
Exactly. So,
payroll.
so that IUL, so the way I'm setting it up is I have one client, that client deposits $60,000. The bank takes that $60,000 out minus the 3%, and they put it in this IUL. That money is sitting in there the entire time. And then the bank is taking out loans against that money and then using it to pay bills. So now that money is sitting in there, growing for the bank, but the bank is also using the money to loan it out to us, to the general public, to the consumer.
Mm-hmm.
Right? So that's the way the bank does it. So now what I'm doing is like, okay, you understand how the bank is making money. Now I'm going to take the bank out of the picture and I'm going to put you in there. So now you're in the driver's seat. Now you're the banker, you're the depositor, the loaner, you're all three parties.
Wow.
And you know what else? You
powerful.
put as many branches as you want.
Right. So I call it the branch of Tim or the branch of Caleb. This is your branch, your overhead. It'll cost you whatever the premium is, depending on how big you want the bank or that branch to be. That's the amount of overhead it's going to cost you to keep that branch open.
I like that. Tim, what's the catch? Somebody asks you, what's the catch? I mean, there's got to be a catch here.
Well, I mean, you've got to be healthy enough to get the bank.
Okay.
But even,
so you have to qualify essentially.
Right. You got to qualify based on your health. Okay. And even if you're not healthy, there are ways around that as well. We have solutions to those issues, so that's not a problem. On the same lines that Marlene was on, you guys have heard for years A.L. Williams, buy term and invest the difference.
Mm-hmm.
Well, the problem with that is, the good thing about that is, yeah, you have term life insurance, so if you die prematurely, you're protected. But when you invest that money someplace else, you're losing the tax shelter. It's like closing your umbrella in a rainstorm. You're going to get soaked with taxes. What we do is we're actually buying term insurance. The cost of this insurance is minimal, especially the more healthy you are. The costs are even less. But what we're doing is we're just putting a layer by using the insurance, the IUL, we're putting that tax-free shelter over your investments into an index where you can't lose money. And the indexes we have don't have any caps like they did in the past. And they've even got some of these indexes that we got. One of the ones I just started using not only has no cap, but you get 220% of whatever that index does, which means if that index goes up 10 points, our clients are credited with 22%.
Ooh,
can't lose money.
Pretty juicy.
There's no penalties. If you pull the money out, there's no penalties because it's loans. And you get higher than average returns than you would in the stock market with no risk. I don't know why. Where's the problem here? I can't see anything.
I don't see anything so far. Now you mentioned this nasty little T word, Tim, taxes. People don't like taxes. Taxes are nasty. Taxes are probably continuing to go up. Are you essentially telling us that when you pull this money out of your personal bank account, it's tax-free money?
Yeah. And you know what else? I'll give you one better. You're pulling it out in the form of loans because loans aren't taxable. And Caleb, there are no loan payments and you never have to pay the loan back.
Wait a minute.
How's that, huh? Icing on the cake.
How is this possible?
Yeah,
a non-recourse loan.
Yes.
Again, guys, this is not traditional banking. As we all know, right? You go to Bank of America, you go to Wells Fargo, you go to Chase, whatever. And if you qualify for that, that loan they want to give you, they are expecting you will be paying that loan back to them with interest. What we're telling you now is this is not the case.
Right.
If you're imitating the banks utilizing a liquid IUL, Index Universal Life Insurance Contract Bank. This is so cool, guys. Like, how can people not get excited?
Here's the cool thing. Not to interrupt you, Cal. I'm sorry. Here's the cool thing about this too. If you think about this, the banks borrow our money. They put it back on the streets in the form of loans. So they're making the spread. That's called arbitrage.
Mm-hmm.
Okay. Now, here's the cool thing about this. You get somebody that pays off their house. What do they have? They have a paid off house. So if that house is worth $500,000, that money is in the walls of their house earning nothing. It's
True.
subject to the ups and downs of the real estate market, just like it would be if it was in a mutual fund. So you don't
and
want
it's aging. So if they don't keep it up, it could be depreciating in value.
Pay your taxes. That house isn't yours either. Okay.
Right.
But here's the cool thing about this. We want you to pay off your house quickly, but we do what's called the ultimate balance transfer. Okay. What we do is month by month, as you're borrowing that, taking the loans out of your policy to apply towards your debts, we're transferring that balance from the banks into your bank. And now you're getting the spread. We're teaching you how to do arbitrage that banks and corporations have been doing for decades.
Wait a minute, Tim. Are you telling me not only am I going to pay off my debts faster and in a fraction of the time, but I'm going to earn interest on the money that I loan to myself? Have you lost your mind?
No.
It's 100% legit, isn't it? And yes, guys, it's very legal, and it's a strategy that's been used for many years now.
You know the difference between tax avoidance and tax evasion?
Tell us.
About 5 to 10 years.
There you go.
Unless you're on a certain
in prison.
Yeah. But yeah. So
that's a Robert Kiyosaki now, isn't it? If I'm not mistaken.
I love Robert Kiyosaki. Tax avoidance is just, if you learn the rules, you can avoid paying taxes.
That's right.
You evade taxes, you get penalized for that.
Which the wealthy have seemed to get pretty good at, have they not, Marlene?
Absolutely. Absolutely. They don't use their money. They make their money work for them. They do not work for their money.
Robert Kiyosaki, Rich Dad, Poor Dad.
Phenomenal book, guys. If you've never read it, game changer, life changer. So we've really painted a pretty strong picture for folks here in, just a few minutes of what they can be doing, what they should be doing. I made a post yesterday. Let me just highlight this about retirement, right? Because I had the conversation too this morning with Fran. I said, one of the problems is people are living longer now. So retirees are running out of money faster. And I mean, that's heartbreaking, number one, because here you are, you spent God knows how many decades of your life, right? Working your assets off to get ahead, right? To create a legacy retirement. You should be out traveling, spending money, right? Seeing the world that you didn't get to see while you were working. And now here you are having to be frugal and conservative just to pay your bills every month, let alone, get out there and travel. And so I said, retirees are scraping by now to pay their bills, right? We all know the financial markets are unpredictable. It's hard to forecast the future, right, of your investments. But another well-known advisor said, if you've been following my emails, you know how I champion max funded IULs. Hint, 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 right? Follow the money trail, follow the paper trail. It's not just an investment option. It's a strategic vehicle tailored for those aiming to secure their financial future during their golden years. I mean, again, guys, right? How many folks do we know who have lost money in their 401ks and their pensions? And, they're literally hanging by the skin of their teeth going, what's going to happen during the next recession, market crash, bubble, or whatever? What would you say to people that, because again, that is their primary piece of security in their minds. They're like, okay, if the poopy hits the fan, at least I have this to fall back on. But what if they actually don't? What do they need to do today to change that possibility, to change that future potential of happening?
Go ahead, Marlene.
Well, Warren Buffett has 2 rules, right? Number 1 is never lose money.
It's a good rule.
And number 2 is don't forget rule number 1. Okay. So don't lose money. Don't lose money. And the market is where you would have the potential to lose money. You have the potential to make, but you also have the potential to lose. And when they talk about the averages of growth, those averages are not good numbers. You have to see the actuals, because when you compare the actuals, that's when you see the truth. The proof in the pudding is to actually how much your money is really growing or how much your money you really are losing. None of this, the averages don't make sense.
That's good.
Another thing too, Caleb, is that when you're putting money in those qualified plans, 401ks, 403bs, TSAs, whatever they are, basically that qualifies the government to be in your pocket, not only for the rest of your life, but when you die, they're going to whack that thing before it goes to your kids. By the way, they just passed the Secure Act, which means they get to secure more of your money. You want to read up on that, okay? You do not want to have money in qualified plans at all, especially when you retire. You know, think about this. If your money's in the market, let's say that you've got stock in your mutual funds inside of your qualified plan. Those things weren't designed for distributions, because think about that. If you want to live on, let's say, $100,000 a year, and you're selling shares, let's just say that are $100 a share, and the market goes down to 80, that shares go down to $80 a share. If you still want to live on 100,000, you've got to take out 20% more of those shares, sell 20% more to get that same income, which means when the market goes back up, you're going to get less.
Oh, somebody's calling in on Tim's phone.
So those never designed for distribution. Okay. You want to have tax-free distribution. And this is what this allows you to do. We're going to get you out of debt faster than you ever thought possible, without changing your lifestyle. Okay.
I like that.
And secure you with your own bank. I mean, it's a wonderful thing. I've been doing this 33 years. When I saw this, I'm like, this is the greatest thing I've ever seen.
I was going to say, guys, that we've got a couple, of experienced advisors, agents here. Well, 3 of them now, right? But, decades of combined experience here. And one of the phrases that one of our estate attorneys has frequently used over the years is she talks about divorcing the IRS. Now, that sounds like, ooh, yeah, cool, but maybe a little bit scary. But again, we're talking about a way to do that legally, right? Where you don't do the 5-6 years prison time, right? And many people have figured this out. There is a way when you have a proper revocable living trust and estate plan in place, when you have learned to imitate the banks and you're doing what we're telling you to do, you will begin to divorce the IRS or take them out of your pocketbook and not leave them in there, like Tim just mentioned, right? If you've got these other type of retirement accounts. So let's bring this full circle, guys. Closing thoughts and statements. What do people need to hear right now, right here today, to take action and get moving? Because procrastination really is not only the enemy of progress, but it is the enemy of protecting our legacy. And the last thing anybody wants, right, is to lose it all after they spent their life working for it. Have kids, grandkids that you wanted to. I mean, I don't have the grandkids yet. Y'all do, but I've got kids, right? But I mean, don't you want to be able to do things for your grandkids too? I mean, Absolutely. Come on. Why are we doing what we do? What would you say, Tim, to get people into action today?
The analogy I keep going back to is, when's the best time to plant a tree? Well, 20 years ago. When's the second best time? Today. Okay. So just to get started, all we need is your numbers. We work with a financial GPS, just like plugging in your address when you're going on a trip. You send us in your numbers, we'll do an analysis of you, and we'll give you your debt-free date. How many people out there know the month and year they're going to be debt-free? I venture to say next to nothing, unless they work with us.
Right. Not very many in general. Yeah.
Yeah. And the other thing too, Caleb, is this. We do something nobody does. We give our clients white glove service. Okay. I give it to when you first got your driver's license. My dad didn't toss me the keys to his car and say, good luck, son. Any trips we had to do, run to the store, Tim, let's go. He'd throw me the keys. Let's go. And he'd rode shotgun with me. Look I still get goosebumps thinking about him next to me in the car driving. But, once you know that, once we're capable of knowing you know what you do, and you tell us, hey, I got this. This is easy. And I'm telling you, clients say that all the time. I got this, Tim. This is easy. You're on your own. You're solo. We're always available for help. Obviously, just call us. We're there. But we do something nobody out there is doing, and we make sure that you're going to be successful. All you got to do is follow our instructions, just like a GPS.
I love that. Holding hands there essentially throughout the process, right? Marlene, what are your closing thoughts on getting people into action and getting out of that rut of procrastination?
My thoughts are, just imagine living a life of debt-free. freedom. Just imagine that. Imagine your families. My parents worked very hard their entire lives. And while, they gave us a good life, they don't have a lot to show for it. So that, being able to set yourself, your children for a legacy, to have the freedom, the financial freedom that most of us don't have unless you're wealthy. If you don't have to be rich, you have the opportunity to make this happen for yourself and your family.
I love that, Marlene.
Doing it. You just have to do it.
Mm-hmm.
It doesn't cost anything to do it.
Right.
Sometimes we just don't know what we don't know.
100%. Your greatest weakness might be just the lack of understanding, right? The lack of knowledge and education. And that's what we're here for. That's why we did this impromptu live today, so that you can be aware that there are solutions out there, albeit not everybody. Do you think all the big banks want, they want everybody, JQ public, to know about it? And of course they don't.
No.
Of course they don't. But have they been doing it for years and continue to do it and continue to take out these policies on all their key employees and, asset? Of course they do. Of course they do. But you guys can too. And again, I was telling Fran this morning, again, there was an extraordinary law passed back in 2020 that actually made these cash value life insurance contracts even better for the JQ public. And again, they weren't formally accessible to anybody and everyone out there, and they are now today. And we've got a wonderful team of people who legitimately care. Like, we could go on, and we are going to do that in the future. We're going to bring clients on, right, Tim and Marlene, have them share their testimonies, how it's transformed their lives. The three of us that you're looking at here, we all became agents of these products because we were first customers, and they transformed our own lives, and we recognize the opportunity that's there. Tim, Marlene, appreciate you guys doing this impromptu. Let's do it more often. Let's get some more of the club in here and just continue to generate this momentum and excitement. I appreciate you both. Thanks for tuning in, everybody. Get out there and share this video with somebody, and then, reach out, because what you don't know can and will hurt you down the road. And you have the opportunity to protect your legacy today and ongoing into the future. Take care, y'all. Thanks for tuning into the show. Please be sure you subscribe on YouTube for the podcasts on anchor.fm and follow me on social media at Metalpreneur. If you're ready to talk about building your own bank, use the QR code or go to rebrand.ly/buildabank. Be sure and join us for the next broadcast, as together we learn to live and operate just like the banks do.